Good morning, everybody. Hey, Guy, are you an expert on the Canadian dollar yet? Is that your thing, your forte? It's more good trading, huh? Yeah, well, you're not an expert, not yet. Well, good. Hey, good morning, everybody. It's the 27th of January, 2016, another trading day for Forex traders. It's also a Wednesday, which means oil inventories day. So oil's going to move, which means in current market conditions, everything's going to move. But it's also FOMC meeting day. So we're going to have lots of pop and stops until then. If you hang around until after the music and stuff, I'll give you a link to attend my live coverage of that on the YouTube channel for Forex.Today. Would you like to attend a live session? I'll also teach you everything you need to know about the FOMC. The insider's guide to the FOMC. So anyways, without further ado, let's get going, huh? Mikey says, hey, yeah. Ryan says, you the man. Indeed I am. Someone's got to be the man. Might as well be me, huh? Hey, so anyways, good morning. Hey, let me remind you that trading... Oh, wait. Wow, everything's all over the place. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Don't touch the stove, it might be hot, and you could get burned. Right? Make sure you tie your shoelaces very tightly, or they could come undone and you can trip down the stairs and kill yourself. Be careful. Hello. My name is Wayne McDonell. I'm the Chief FX Market Strategist from TradersWay.com. We have a secret plan to take over the world, and here's how we're going to do it. We're going to do these educational sessions every single day. I'm going to teach you how to be a trader, both technically and fundamentally, and I'll share with you trader psychology and my experience of doing this for many years, and my love for it and enthusiasm for it. I'm going to share all of that up front with you for free. And here's the goal. Over time, whether it's 5 days or 5 years, you will start to develop proper trading skills and proper trading habits. And then from that, you'll start to see some success. And then you will start to develop confidence. And one day you say, you know what? Maybe I can do this as a living. Maybe I can be a full-time Forex trader. Maybe this is my thing. And when you choose to start to trade real money in a live trading account, you're going to need to choose a broker. And we hope through our investment into you up front that we will build loyalty and respect with you, and that you will choose TradersWay as your prime broker, and you will continue to trade for many years successfully, and we'll execute those trades for you. Pretty simple, right? That's how we're going to do it, through love and respect, and doing the job, right? Place the trade quickly, cheaply, and get out of the way, right? So anyways, we do these educational sessions. The first step of taking over the world is to make you successful. So therefore, we're going to do these educational sessions every Monday through Thursday here at Forex.Today, and then every Friday at FXStreet.com. And we give you access to everything you need to be successful. So just come over to Forex.Today and register so you can attend these events. You'll also find, like a dozen trading ideas posted by our analyst team from around the world. I was thinking maybe Guy should be posting Canadian dollar trade setups for us. Huh? He's got boots on the ground. Yeah, well, send me an email, eh? So anyways, that's it. Real people watching the markets for you, placing their trading ideas, and they're not buffoons. They're really good traders, and they're sharing their ideas for you. And the cost for that is free. All we ask for is love, respect, admiration, and that you share it and you comment. That's pretty cool, right? All right, first order of business. If you go to the Forex.Today YouTube channel, you will see that at 1:30 p.m. today, I will do a live hangout in regards to the FOMC meeting today. So for about a half an hour, or for a full half an hour, I'll teach you everything you need to know about the FOMC. You're going to need to attend that part live, because it will be broadcast live, but then in the recording, I'm going to go back and edit that out. So it's like a super extra bonus for those that attend. I'll teach you everything you need to know about the FOMC. And I'll actually walk you through what the meetings are like and what order everything is discussed. Pretty sweet stuff. And then we'll get the event live, and or the announcement live, and then there's a press conference. I mean, I don't know. This could be 2 hours. Who knows, right? We'll let the market dictate that. But I'm willing to donate 2 hours of my life for free again, because I love you. You're my sweet baby. And with that in mind, and then we'll move on in a second. With that in mind, oh, wait, that's not it. Or is it? No. Where did it go? Hang on. Let's go to our partners. I need to give you... I'm going to ask you for something. I did say that I'm going to give you another 2 hours for free. And if you think about it, I do a lot for free. More than 200 hours a year. That's a lot of community service, isn't it? Anyways, I would like to ask you something. I've been nominated for the best speaker at fxstreet.com, and I would like you to vote for me. That's it. I think there's six categories of various, people. On now where did it go? I think there's about 6 categories, so you just choose somebody and then you click next, choose somebody else in that order next. I'm in the 5th category for best speaker on FX Street. I would appreciate it if you voted for me. It's nice to win these things. I believe I've already won this award several years ago, so, it's not that I need a notch on my belt. What it is I need to know that you care. And if nobody cares, then what's the point? I'll do something else with my time. You know what I mean? Right? So that would be cool. That's all. That'd be cool. It'd be really nice to get some public recognition. That's all. So if you could do that, again, here is the link. Okay. Okay. But, if you think about it, I could go golfing. That's what I used to do in that time slot. I would just go golfing. So, okay. So, yeah, that's it. Okay, cool. You guys ready to do some trading? I suggest, I guess is the word I'm thinking of. I suggest that we do some technical analysis today. I don't think we need to do a big meeting, because I think what will happen is the market is going to move a bit when the stock market will move for 20 minutes, and then it'll slow right down. And then news will come out at 10:30 in regards to oil, and then that'll pop and then probably slow right down. And then it'll wait till the FOMC meeting, and then that'll pop, and then who knows, right? My guess is Euro USD is going to skyrocket. And then the next big thing is tomorrow, the BOJ meeting. So that, it's a really, it's a good trading week, as you know, from Monday. So I think what we'll do is we'll bust through all the charts. I'll do it fairly quickly, and then we'll high five and belly bump, and then I'll just see you at 1:30. All right. So Gino gets right to it. Look at Gino, man. Gino's blunt, huh? Get to it. Why would the Euro USD skyrocket? Okay. Quantitative easing out of the Eurozone weakens the euro. We already know that. We've sold it. It's dropped 3,000 pips. Okay. What we're waiting for is more quantitative easing out of Europe to make it fall, or let's say to make the euro weaken more. You got me? Draghi has said that they discussed at the last meeting discussing additional quantitative easing at the next meeting. So they've discussed discussing it in the future. And then I don't know if that even means making an announcement. You know what I mean? So at the next meeting, he may discuss it and say, well, we're thinking about doing it next meeting. I mean, this could be like a September increase in quantitative easing, right? But the point is, it doesn't look like it's going to be today, right? Quantitative easing. So there's no reason really to hardcore sell the euro. We've already done it. Okay? So where's the new weakness going to come from? Okay? Now the other side of that trade is dollar strength. Great. Dollar strength started the minute the Fed said they were going to taper their quantitative easing. I can go right back to the exact minute. I know it for a fact. And then we got rid of all that quantitative easing, great, and then we were at, no quantitative easing. And that in of itself means less weakness is more strength. And the idea that in the future, the Fed will raise interest rates, and that's going to attract new money based on a positive interest rate differential, right? Great. So the market kind of thought this interest rate hike that they did in December was supposed to happen sort of January, February, March. Did they get that? No. And then then the market was desperate for a June rate hike. Guess what? Every time the market does stuff like this or thinks this way, stupid or not, what happens is the market front runs it because the expectation becomes reality. Perception creates reality. If you think the Fed's going to raise interest rates tomorrow, why would you wait till tomorrow to make money? Because then that'll be priced in. You got to price it in today so you can make money by tomorrow or next month or next year, whatever your expectations are. So they're like, it has to be June, it has to be June, it has to be June. Buy lots of dollars, buy lots of dollars, buy lots of dollars. Whoop, it wasn't June. Whoop, it wasn't September. And if you recall, what happened was lots of traders are on the wrong side of that trade. What happened the first time that the Euro USD, not the first time, but in the last couple of years, right? What happened when we first touched like 105, 106, 107? And then the world found out the Fed wasn't raising interest rates. What happened to the Euro USD? We went to like, what was it, 115? It jumped like almost 1,000 pips, didn't it? I mean, it was ginormous. Euro USD rally. What happened? Did anyone buy the euro? No, we spent about 3 months, week after week after week. I was showing you, based on Commitment of Traders report, that no one was actually buying euro. Yet the euro skyrocketed hundreds and hundreds and hundreds of pips. Why? People were on the wrong side of the trade. So now let's move to today, if you don't mind me. Just jumping to the point, right? Let me lift up my skirt. Here's what's going to happen. Too many people think the Fed's going to raise interest rates too many times because you remember their dot charts told us that they were going to raise 4 more times, that we're going to go to like 1 to 1.25% by the end of the year. And a lot of people are probably trading that. I don't think the volumes are as big as that we had, earlier in the year, because we were only expecting a change in policy, not necessarily a specific rate hike. Well, all right. The last time I looked, there was an 89% chance the Fed's not going to raise interest rates today. I know, it's only 89. Right? Remember Dumb and Dumber? What are the odds of a girl like me getting with a boy like you? Which is funny because he says it backwards. And she says, well, 1 in a million. And he says, oh, so there's a chance. So anyways, yeah, okay, there's 11% chance, right, that the Fed's going to raise interest rates. But I think a lot of people are going to go, whoopsie-doo, I'm on the wrong side of this trade. And Draghi didn't say he was going to do more quantitative easing. He was just going to they were going to talk about it. Right? Drink some wine, smoke some cigarettes, quantitative easing. Yeah, okay, great. So, there's probably no real money on the table there. Right? Central bankers love to talk their book because and the best in the world is the Reserve Bank of Australia, right? Governor Stevens can knock 1,000 pips off the Aussie dollar and not actually spend any money. So anyways, there's a huge chance nothing happens, and if recent history can be a guide, remember, history doesn't repeat itself, but it certainly rhymes, then the last time we were in a scenario like this in the earlier part of 2015, what happened was the Euro USD went up only because there's too many people short the Euro USD, and there's no real reason to be short Euro USD over the course of next 3 or 4 or 5 or 6 months if additional quantitative easing doesn't come in or higher interest rates doesn't come in. You see what I mean? I mean, we need one of two things. At least we need more quantitative easing to weaken the euro, or we need higher interest rates to increase the value of the US dollar. Ideally, you get both, but right now, likely neither. Mike. I hope it's not insulting, Mike. And I feel bad because every time I try to do a Mario Draghi, it always comes out Jean-Claude Trichet. So shows you how old I am, huh? So who asked the question? Anyways, that's my answer. Yeah, Gino. Yeah. Was that good? Does that make sense? Like I mean, it's such a good question that I have to throw everything at it so that you completely, from 5 different ways, get it. Because it's the whole point we're here, right? I mean, I can just end it now. That's what I think. That's probably what's going to happen. These are the 9 different reasons why. I've thought about it. I care about it. This is it. This is it. I mean, that could be the end of the webinar. All right, goodbye, everybody. Because the rest is just nonsense, right? So James says, oh, well, hints that Yellen will rise in March. And well, look, I don't care about hints and all that. Like I was saying that yesterday about something. I only care about fact. So don't give me hints and rumors, right? So you could say, well, the dot plot suggests a March increase. In fact, we talked about this probably October. The October meeting, we said that the Fed was going to raise interest rates at the December meeting, and my reason for that was they told us they would. I don't know why there was so many debates on television, but it was pretty clear. They said we will raise in December. I tend to believe that. Right? The only time I was ever lied to by a central banker was the stupid Swiss National Bank. Okay. And then what we discussed is every other meeting they will raise interest rates. Can anybody confirm this? The whole part about every other meeting they'll raise interest rates, right? Not January, but March. Not April, but June or whatever. Yeah, right? And there you go. Well, where do I get this from? Well, look, they told us. Now, you're reading the Fed research, right? I know you are. And when you read the dot plots, they tell you they're going to raise 4 times in 2016. That's what they've said. Now, we can debate whether they're going to change their process or thoughts over the course of the year, because of the course of a year, a lot could happen. And they could say, well, new risks have appeared. Things have gotten worse, not better, and therefore we're going to have to adjust our dot plots and maybe only raise twice or something, right? Or 3 times, whatever. Now we have to guess. There's 8 meetings, and they said they're going to raise 4 more times. Drum roll, please. How about every other meeting? Richard says, right, the only problem is if they don't. It's not a problem. It's not a problem because they will tell us. You have to go back to modern central banking strategy or theory. And if you're a central banker in the Western world, or how about the modern world? I shouldn't say Western world. In the modern world, a prime directive in your thinking process, unless you're, with the stupid Swiss National Bank, is transparency. And lots and lots and lots and lots of changes, even since I've been a currency trader, right? Which is only the 10, 12 year kind of thing. Even in that short amount of time, all central banks have radically changed their processes to be as transparent and vocal as possible. They're not just going to freak the market out. Okay? So you don't have to worry about that. That's only sensationalism on television that talks about these things. Now, we know the data that these rate hikes are dependent on is pretty shaky, right? But we have access to that data too. But let's be honest, it wasn't that great at last quarter either. You know what I mean? So I think we know it. We're not going to get 3% growth. We're going to get 2%, maybe even 1.5%. That's fine. We get it. The external or the risks are external. The ECB is doing the right thing that they should be doing. That makes me feel good. Probably makes them feel good. And let's be honest. Here's how you make money. Europe in 5 years will be in a better place. Asia in 7 or 8 years will be a better place. That's how you make your money. Done. Now you might feel like that doesn't do you much good because you're worried about day trading, you're watching a 15-minute Stoke, but that's how you make your money. So maybe by the end of this year you start buying European companies, you start buying European property, you start buying when the euro's super weak and that bottoms are being hit, And in 20 years you'll be fine. In 10 years, you'll be fine. But then the consequence of bringing Europe back online into the global economy, then more demand for products from exporting nations will increase, whether it's soybeans from Brazil or laptops from China, doesn't matter none, cars from Japan, right? Flat screen TVs from Korea. Okay, fine. Demand for that will pick up. Therefore, commodity currencies, their demands will go up because demand for commodities will rise. And so look, just take a 10-year perspective and it's easy. James says, historically, a falling oil market precedes a recession. All right. I am taking a semester at Harvard, and I'm studying the entire history and global geopolitics about the energy industry and the energy complex. And I've read over 2,000 pages in the last month and a half. And that is only true if it's a demand issue. So I'm not going to agree with that totally, James. I don't think you could see what's happening now and make that statement and say they're one and the same. If oil prices collapse because because we have global macro recession like we did in 2008 and oil dropped to $30, yes. This is a supply issue. This is a technology issue. Yeah, but not because of oil, Jimmy. Demand's been low for 10 years, but we had oil at $100, 105. In fact, if you were hanging out with me, I had a shorting oil at $106, and I made an outrageous statement of like, hold it until it gets to 60. And they're like, 60? It's been up here at 110 and 115 for months and months. And I'm like, yeah, well, it ain't worth that. It's worth 80, maybe even only 60. This was only like 2 years ago, guys. Is anyone around from those days? I said 60 and I look like an idiot now because it dropped to 30. Right? What a dummy. Now, that was, let's put it this way. I'm trying to think of an example. What we're going through now is similar to the to U.S. industry really truly developing personal computers. So every employee at a company had a computer on their desk. And then we connected them through the internet. And productivity in the United States just was incredibly high because employees can talk to each other and do all kinds of things very, very effectively, very, very efficiently. Suddenly you have spreadsheets in front of you. And just imagine trading. Suddenly you have a chart. You don't have to draw your Euro USD chart by hand. I mean, good, right? There was a time, right, just before me, but there was a time when once a week or even once a month, a book would show up at your office and you'd open it up and it'd be your charts, candlestick charts. And you're like, oh, my charts just showed up. And you'd spend like $2,000 a month. Because someone had to draw all your charts for you, right? Okay, so having a computer in front of you is better, right? So anyways, if you want to have sort of a comparison, there was a time when there was no oil west of the Mississippi. And so all the oil was coming from basically Ohio. Okay? We're talking, I don't know, 1870 or something, right? And the president of the Standard Oil Company of New Jersey said, if you find oil west of the Mississippi, I'll drink every gallon of it. And then all of a sudden, guess what? Oil in Oklahoma. Guess what? Oil in Texas. And then what did they find? Eastern Texas had oil. I mean, a lot of oil. The Black Monster or something, I think it was called. And it required new technology to get to it, and they developed it. And there was so much oil available now that the world was drowning in it. I'm not joking. The old videos of this stuff is mind-blowing to see it. And oil prices collapsed to the point where it was actually zero. And the National Guard, the government called in the National Guard to walk into the oil fields and force producers to stop producing. Oh, John's out in East Texas. You have they have big salt domes. You can just walk out there and say, oh, there's oil over there. Go toward that salt dome, right? So anyways, oil prices actually went to zero, and they actually had to call in the National Guard because Standard Oil and these big oil companies, they were way out east. They were in the Northeast. They weren't out in Texas, so it was all wildcatters, all these independent oil drillers. They could do whatever they wanted. There wasn't sort of anybody in charge that could just say, whoa, let's slow back on production, right? No, it was all these independents. They had oil wells next to oil wells next to oil wells next to oil wells. They were like touching each other. It looked like downtown Manhattan, but just with oil rigs. Okay? And they overproduced. Fast forward to what? I'm going to say 2006. There was a guy in Texas that had been working on a way to frack natural gas for about 10 or 15 years. He was trying to find a way because he realized oil in his part of Texas was going away. And that maybe the next new thing is oil and gas, but you're going to have to frack it because they start looking for where oil is, and they're like, well, if we're going to go to Colorado or Wyoming for oil, you can't get it. We have to frack it. But there was no fracking technology. So anyways, so he works on it for like 15 years, spends millions of dollars, and he gets a breakthrough. But then his company gets bought out by a company called Devon Oil. Guess what? That's my family lives in Devon. So anyways, they get together, these two companies, and guess what? Devon makes money because they're really good. They have an advanced technology called horizontal drilling. And they buy out the company that has fracking. Pachow! Say what? Sideways drilling and a way to suck oil out of stone? Boom! New technology. It was like inventing the internet, but for the oil industry. Right? And that's it. Now you can think of the United States as a similar situation as East Texas, where suddenly there's thousands of independent oil drillers. Right? I'm not joking. You can go to places in the United States and there are, on 100 acres, you could have 100 oil wells. It's ridiculous. It's thousands and thousands and there's, like, I'm not actually joking, there's over like 10 million in the western United States alone. 10 million wells based on fracking. 10 million. It might actually be like 15 million. I was just looking at the numbers the other day, and they were old numbers. That's a lot, guys. I don't know about you, but that's a lot. And, okay, so when you add all of that up, and a lot of that is independent, what happened? They produced so much of it that it's basically worthless now. But, okay, yes, we have global macroeconomic problems in the economies around the world, understood, but that has nothing to do with what's going on now. We could have ripper, awesome, booming economies, and the price in oil would have still happened, probably slower, and maybe to a lesser degree, but that would only have produced more wells and more production, and it would have crashed 2 years later. But the point is, it's not because of the macroeconomic issue. It's not a demand side issue. We've had a demand side issue for a very long time. It's not what moved oil from $100 to $25. Okay? So that's all I'm saying. Okay, Jimmy? So be careful what you read, because a lot of people will say, oh yeah, well look at this and that's that and there you go, and like, whoa, dude. So, think of it. I've read 2,000 pages on the issue in the last month. What do you do with your free time? Right? And I'm going to study this stuff pretty intensely over the next 6 months. And I'll basically come out with a PhD in oil. But I think it'll make me a better trader. Right? But China demand issue, blah blah blah. No. See, no. You're thinking old oil, new. Everything's changed, right? It's like you're still talking about abacuses. No, dude, I have a supercomputer. Oh well, but the abacus stuff. No. Stop talking about abacus. Everything you know about oil is over. Okay? There's oil everywhere in the world. There's going to be a lot of it, and OPEC's probably going to die. What's the point of OPEC if half the oil in the world is going to come from independents? Right? How's Russia going to play into this? Fabulous questions, guys. That's why I'm taking the class. Taught by a Russian, by the way, who has a PhD from Oxford and now is a lecturer at Harvard University. Boom. I can't wait. I'm like tickled pink. My first class is tomorrow. So yes, I've read all 3 textbooks before the class started. But that's how I roll, yo. So yes, I think you're mixing water and wine, James. Old world, new world. There's a lot, yeah. So it's cool. It's cool stuff. Like we could sit around in a bar and talk about it and have a few drinks, right? But anyways, let's do some trades. Let's do some trades. Okay. Let me double check this. Okay. So I think this is going to be dependent on oil inventory data today at 10:30 and FOMC, the press conference at 2:30, right? So we're stuck there. I wouldn't overtrade this time of day, and that was kind of the point I was making. Okay, we are in a scenario of lower highs, higher lows. This tells me to take a break. But like I said, if I were to guess, this is going to be up today. Okay? Because no additional quantitative easing in the next 3 months, and no interest rate hikes until the next meeting, maybe. So, this week, next week, I wouldn't be shocked if we're on our way back to, I don't know, 120, 115, I don't know. But we don't have to trade it now, do we? I guess you could drop into a smaller time frame like that, and you should already have this thought process. Now, by the way, I did talk about this yesterday very, very specifically, very, very clearly. You heard the same message, that I thought Euro USD would go up. I remember saying there's no reason to be short Euro, and there's no reason to be long dollar. That was, I don't know, when was that? Down here? Somewhere around the monthly or the weekly central pivot, whatever it was. Okay, and so same message today. Now, Piggy's been a great one. And I guess we got to, let's do Beast. By the way, we have probably 3 people in Singapore that want to get together, and probably 3 people in Dubai that want to get together. So we need maybe at least 3 more in each of those places if you want to get together for a trading day. All right, so here we go. Pull back. Okay, happened a little later than I would have liked. And now the question is, do you believe we're going to make the higher high? Okay? And this process is going to come from really a higher time frame swing. Okay? So clearly someone saw the 382 role reversal idea, but you wouldn't have traded it this way on the 1 hour unless you do it like expansion wave up, 3-wave correction down or something. I'm sure if you're an Elliott wave, you could change your waves and just to get it all nice. But that's the problem with Elliott wave, right? I think what we're looking at is just simply, this. Oops. Come on now. Okay. Up, down, and if you're a bull, the target is actually about here, about 78 for the week. And next week, actually probably a little bit higher, more like 79. But see, soon we're going to get new pivots, right? And that's going to change. Right. All right. Good point. Good point. Sometimes I don't even care what currencies I'm talking about, but sometimes it does matter because it's just the analysis that I'm showing you, right? So yes, New Zealand interest rate decision could be a disappointment for this currency, but nonetheless, this is what the technical analysis shows. Okay. Okay. How the fundamentals change things? I'm not so sure, right? So anyways, that's what the analysis shows. If that trend continues, great. But don't be shocked if it doesn't, right? But I do want to show you, I haven't looked at this one in a while. Aussie. Okay. What happened to Aussie over the last 12 hours? Excuse me. Better than expected CPI. Thank you. Nice, huh? Shows that the market's pretty eager. And once again, for like the 50th time, Aussie dollar versus US dollar is back above 70. I'm not joking. We've been here, I don't know, what, 6 months, maybe? So I think if you were looking at Aussie USD on the daily chart, we've broken the 21, which means there's a reasonable chance we're going to slowly over the next 6 months work our way back to the 200 EMA, especially if the Fed takes their sweet time in raising interest rates. The only problem I have with this is that we're watching things like trade balance of trade data out of Australia, and I still don't see anything good. I mean, I don't even see anything hopeful. Okay? But we're going to have to keep an eye on it, right? I mean, maybe we do start moving toward where the interest rate differential matters. Maybe it's fallen so far it can't possibly fall any farther, but that's usually a death trap to think that way. But I've been talking about the 70 area for a very, very long time, and once again, we're back above 70. It's, at some point we're going to have to call it a floor. I guess maybe I should just show it instead of talking about it. Okay. This is we get down here in around August, right? We're back above 70 again. So this whole area that I'm talking about is basically here, okay? At some point, it's probably going to come back to the top of the range. Is it going to be US dollar weakness? Yeah, if the Fed, especially if the Fed comes out and tells us, maybe not 4, maybe only 2. Pachow. There you go. Weak dollar. Aussie doesn't change a bit. Or we're going to need a reason for Australia to export more. And I don't know. Do we have that? Okay. So my thought process is if the S&P 500 does break to the downside, and it is the end of the world as we know it, then dollar gets super weak as money flies to safety, yen gets strong, Swiss franc gets strong, Singapore dollar gets strong, gold gets strong. Gold gets strong, Aussie gets strong. Okay? And what happens? Right? What happens? CAD does all right, but is going to be more affected by oil. Australia does great, and South Africa is saved. But the problem with South Africa is that these gold mines that produce gold for South Africa get paid in US dollars. So really higher gold prices isn't necessarily better for South Africa. What do you mean that I sell gold? Are you talking on these charts? Yeah, don't. This is my play account. Yeah. So yeah, don't. I try not to trade too much on this, in case you guys get caught. So in situations where like you must have seen it, you may notice I don't bring it up. But yeah, this is a I hate this type of trading, but this is grid. This is a grid mechanism. But yeah, don't don't pay any attention to that, right? Yeah, no, I know. No. I think this is horrible. What a horrible thing. Okay? Yeah. But that's a grid system. And a grid system is this idea that you get your long-term strategy right. Okay, so let's talk about this because I'm actually mentoring someone with this idea in mind, and it brings up its own problems. And I don't think this is the right way to deal with it, but I like to be an expert before I judge things too much. But I hate grid systems. But let me explain it. If you believe the long-term trend is this, and that's your strategy, and what you're going to do is you're going to sell and get in, right? When do you pull the trigger? Is this enough? Is it going to be over here? What if it comes up and down first? And then what if there's a thing like this? And you might find that this whole area in question of where do you pull the trigger, it takes weeks of your time, and it develops a lot of frustration and a lot of break-even trades, some losing trades, some winning trades that then come back. And right as soon as you give up hope, price is down here, and you're like, damn, my strategy was to sell, and yet like I worked for a dirty dog for 4 months, lost money, and never caught it. Has anyone felt a frustration like that before? Seems easy enough, right? Sell the retracement. And especially when you're working on a higher time frame, right? Because then you say, well, what if I use a 300 pip stop? And then the son of a thing comes up, knocks you out, and then takes off. So there are multiple ways, right? So I'm teaching someone how to swing trade right now. And so there are ways to deal with that. One way that I don't like, but I'm telling you, can be successful. I don't like it. I mean, I almost hate it. I'm a lover, right? I'm not a fighter. Actually, I'm a fighter. I'll kick your butt. But I'm not a hater. Okay? And one way to do this is instead of dropping, let's say you normally trade one standard lot, okay? What if you had the ability to trade 10 minis? Okay? Same strategy, but what you end up doing is you create grids, and if price does this, then so be it. And you don't get out until you've blown your budget of, let's say you normally trade one standard lot with 100 pips. Now you basically have 1,000 pips to lose. You see what I mean? And you build your positions, and when you're right, you're quite right. But when you're wrong, I mean, and I hate this where you're down 100, you're down 100 pips, and then you short again, and then you're down 100 pips, 200, then you're down 100 pips on the second one and 200 pips on the third one, and then you short again. I don't like it. 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 But I've analyzed traders quite a bit, and I've looked at millions of trades that other people have made, actually reviewing, track history and trading history and stuff. And there are traders that carry this out successfully. The issue is every once in a while they get caught in these drawdowns. But over the long period of time, I've seen people do very well for periods of years with very little actual, I don't know about pain to gains, but actual, close trade drawdowns are minimal, and successful trading months pretty steady. Right? So I don't like it, but I'm only studying it. Because, here's the thing. How can you improve if you only study the things you like? You know what I mean? I'm Canadian. That means all I'd eat is, pork chops, fried potatoes, and broccoli. And never venture out and try Thai food. What a world, what kind of horrible world would we be living in if we didn't have Thai food? You know what I mean? So I'm testing it because I don't like it. But very often there's something I can learn. Why not? So I do everything. I'll test everything, right? Yeah, geese like come to Montreal, huh? Yeah, what cooking in small towns in Saskatchewan's different than Montreal? Yeah. Oh yeah, I know. No, I know. Hey, in the 1980s in Saskatchewan, Chinese food was like exotic. And then I go back, I don't know, it was 2000 and something. I go back home, I go to like a family reunion, and everyone's got like Rolex watches, they're driving Ferraris, and well, not quite, right? But anyways, much flashier than I'm used to. They were carrying cell phones. I'm like, cell phones? There was a time when Canadians wouldn't even leave voicemail because it was like a machine. So you'd you'd hear a message and you go 0000. Canadians just for some reason couldn't leave a voicemail. So all of a sudden I go back home, and no joke, I go to this family reunion, and they're like, it's catered with sushi. People are carrying cell phones and talking about the stock market. I'm like, what the hell is this? He's like, I'm like, who's this? This isn't Canada. Why are we talking about the stock market? We should be talking about hockey, eh? We should be like complaining about politicians and the weather and complain, right? So, anyways, yeah, funny stuff. Canada's changed a lot since I was a kid. That's faux show. So, all right. So, some technical analysis. Let's just do one more, and then we'll pull the plug. Apparently, it wasn't a short meeting at all, so I apologize for that. Did a lot of talking today. But what else are we going to do, huh? By the way, how's my guest doing? Do you guys remember me drawing this? Isn't that funny? Well, that's nice, guys. Hey, if you know other traders from other markets and stuff, if they're not Forex traders and stuff, if you know anyone that wants to come to the FOMC meeting, invite them. Swing on by. It's YouTube, right? It's just free. You just log into YouTube, watch it live. Yeah. But it's right here. I don't know. I think there's a press conference, isn't there? No? Is this one where there's no? Yeah, you can share from YouTube for that. No? No press meeting? All right, well then cool. We'll get it and then it'll be easy then. It'll be short and quick and easy. But I will do the FOMC overview just, you know. Okay, but it should be interesting. And hopefully we get some good trades. Like seriously, I think the market could seriously move where a lot of people say, "Holy smokes, eh? I'm on the wrong side of the trade, don't you know?" Right? So bring a friend is all I'm saying. It's if you actually go to the link, just go to the link. It places it in your time zone, the time, and you can also set yourself a reminder right here. Okay, upcoming live stream. Hey, Forex traders, watch the FOMC meeting live with me. Okay, that's all you have to do. It's right there, man. Starts in 4 hours and 51 minutes and 34 seconds. So anyways, hope to see you over there. Love you, babe. Got to jump. Oh, and don't forget, I need your vote over here. Okay, this is the last day to vote, guys. That's it. Don't push it off. Okay. So I appreciate you. I hope you appreciate me. I'll see you tomorrow. Oh, and like I said, the other thing I've got to shout out. There's like 3 people want to get together in Dubai. There's like 3 people want to get together in Singapore. We need probably somewhere between 6 and 8 people to make it happen. I mean, the budget for these trips it's only like $5,000, right? So if we can put $5,000 together, cover the expenses, I'll do it at cost, right? And there'll be nothing in it for me except an enjoyable day and get to see some different, flowers. Have a beer with you. That's it. But but yeah, you kind of have to want it, right? So whatever. If we can get a team together, cover the $5,000 in expenses, I'll fly out. We'll spend a whole day together. I'll teach you everything I know. I'll see the city. I'll get back on a plane, fly home. Peace on earth. May the pips be with you. May your profits be above average. I'll see you later.